Will the Bitcoin ETF approval be a sell the news event? We're going to explore this topic and more in this episode of Studamas Trades. Okay, so first of all, Happy New Year to you and your family. Hope it was a good year. We've had lots of interesting events take place this year, and I'm not just, of course, speaking on the crypto front, though that has definitely been highly interesting and entertaining as well. But globally, since COVID, it just continues to get crazier and crazier, or so it seems. But Bitcoin has been on a at least 3 month bull run here and doesn't look like it wants to take a rest, although we have some indications that we are getting close. So I want to cover that in this episode and briefly speak on a few items that might indicate we are getting close. All right, so let me pull up my notes here and just give you a brief bottom line up front, the points we'll be going through in this video. Of course, everybody knows the Bitcoin ETF is probably or most likely going to be approved either the end of this week or sometime next week. All right, and retailers are well aware of that, as well as the halving coming up in April. And so I believe that a lot of the bullish price action we've seen the last 3 months, it started out with maybe smart money. And as typical during these bull runs, the end of the bullish phase or the blow off top is mostly retailers or what we call dumb money. And these are the last to know about a thing that is occurring, and therefore the last to jump on the train and or the rocket ship and ride it to the moon. And so I believe a lot of the price has already reflected or been built into this supposed or probable, you could say, possible ETF approval. Mostly who has invested in Bitcoin towards the end phase here, and the closer we get to the ETF approval, is dumb money, retailers, all right? With that being said, smart money seems to be doing just the opposite, all right? As an example, number two there, I just saw as BTC recorded a new high of 45,300, and I recorded this note several hours ago, so the time frame isn't necessarily accurate. A smart whale sold 800 Bitcoin for 36 million at $45,176. It says 2 hours ago. That was more like 7-8 hours ago now. And I didn't take a screenshot of the wallet, although there was one in this particular tweet. That's where I obtained this data. The token amount was accumulated at an average price of, excuse me, guys, I have a little slight cough here. $19,435 approximately, give or take 2 years ago. All right. So for 2 years, he had been holding that Bitcoin and just now sold before the probable, or should we say possible? It's all speculative still at this point. We don't know whether the ETFs are going to be approved. And we also know that those who control the news are generally the ones with all the money. Hopefully you guys are well aware of that now since COVID. I mean, it's not just political news, it's monetary news, all right? So this could be misinformation we're receiving on the likelihood of ETF approvals. We don't know until it's actually happened. So any trade at this point, any entry is still just speculation. All right. We do see that the bulls still remain in control. However, we're going to talk about a few reasons why this may be tapering. All right. So smart money is starting to sell, and there is more than one example of that. That's just an example I wanted to bring to your attention here in this video. Today we have the dollar bouncing, has bounced almost 1%. Typically, when the dollar bounces, the inverse happens on the SPY, and BTC tends to follow in line. Or stocks, I should say, not just SPY, NDX, QQQ, whatever index you're tracking, often the inverse of the relationship of in the dollar is true. And we haven't seen that on Bitcoin yet, though there is a candle where that has formed since I started keeping notes for this video that looks more bearish than it started out. So we're going to take a look at that. Number 4, CryptoCon, somebody that I follow on Twitter, due to his expertise at macro cycles, has called a mid-top cycle here. And he's using MVRV data, stands for market value versus realized value. He's got a chart. I'm probably going to pull it up if I have enough time here and just go through some of that stuff with you guys. So you can see how good. Now, the CryptoCon called the bottom or entered near the bottom, near-ish, in 2020, around $8,000. Sold at the top around $55,000, $56,000. Entered again at 16,000, and now due to this being a mid-cycle and some tax implications as well as uncertainty, he has not necessarily sold yet. He's just going to hold through this mid-cycle, but he believes we are at a mid-cycle, and I've been following him for quite some time. He's spot on usually, and I want to just take a look at those indications so that you can see them and make the decision for yourself as well. Number 5 there, we're at 0.618 Fibonacci retracement at 48,000. We'll take a look at that. I'm going to pull up the Meyer multiple indicator, and we'll take a look at that as well. That kind of correlates with the MVRV indicator in terms of cycle tops, and this being a mid-cycle top or a local top for some time, believe it or not, despite the ETF approval possibility, or maybe probability, depending on how you line up with that. And despite having in April, looks like we are in fact at a mid-cycle top. That doesn't necessarily mean we're going to go down drastically or down a lot, but it could be another accumulation phase. Remember that long sideways phase we had during the bear market? We could get another one of those. All right, so then last point there, number 7, we're going to take a look at the daily chart, specifically today, this candle that has just formed, and we'll take a look at some of the indicators I have on my RSI chart and a few other things as well. So without further ado, let us get started. I've pulled up the daily chart here. First of all, we'll start with number 7 and work our way backwards and take a look at some of these indicators. So the candle that I was alluding to was this particular candle here. Now, when the day started, it looked like we were going to break back above this red line. Remember, I have talked about this in many different previous posts and videos, and said, first of all, down here on the RSI, I'm going to expand this up a little bit so you can see it better. See this red line here, this ascending red line. All right, that is our leading indicator. I said once we break below that on the RSI chart, good chance that price will follow. All right, so we broke this particular trend line just before Christmas. All right, everybody was still bullish. Remember that? All right, and I thought, in fact, I stated in my last video, which was quite a few weeks ago now, that we would go sideways to down. And look at this, guys. When I made that video, we were right at 45,000, and currently the price sits just above almost 45,000 today. All right, so exactly what I had stated a few weeks ago has occurred and is still occurring. There's no proof that we're going to continue up, although I tend to have a hunch that we will continue, or will pop up to maybe 48,000, quickly tag that with a wick at some point, maybe upon announcement of these ETFs being approved, these BTC ETFs being approved. But nevertheless, my point here is that this ascending trend line on the RSI is the lead indicator. I covered this when I did an altcoin review a couple of weeks ago. Sorry for that notification. I don't know why it's popping up there. And that has in fact been the case. This is the lead indicator. We fell below this in December, and the price has broken below this ascending trend line on our price chart here in oh, wait a second, that was the 8th of December. Excuse me, I'm saying the wrong time frames there. Actually, the 10th to be exact is when we broke below the ascending trend line on the RSI chart. All right, and then we broke below the price, the ascending line on the price chart just after Christmas, actually, December 26th. All right, so those that theory has followed. All right, I was correct in that theory, in that I guess I wasn't concrete on it, but I suppose that might happen, and it has in fact occurred. All right, so then this candle today is bearish. It's showing us that we shot up above that trend line again. I was thinking maybe we go back above that ascending trend line, but that has acted as resistance, and it has caused us to form a shooting star pattern. Let me go ahead and shrink this back down, and you can see that better here. All right, now if I zoom out on the price chart, you can see I have this big cup. Where does that start? That starts at a price of 48,000, right? Keep that price in mind, because the next thing here I want to jump to is our weekly chart. Give me a second to clear this all up, and I'll be right back with you. All right, so this is our weekly chart on Bitcoin. You can see I've cleared all the drawings up. What I want to do here is I drew this Fibonacci a minute ago, and we went from our wick high here on the 8th of November in 2021 to our low price of around 15,000 somewhere in November of 2022. All right, so that gives us our Fibonacci retracement levels. And you can see here that the 0.618 Fibonacci level looks like we are going to be attracted to that and tag that. That is also a pivot high from March of 2022, as well as a pivot or a break over here. So this level is significant. So not only is it a fib retracement level, but it is a level that can be traced all the way back, really all the way from this weekly high candle in February of 2021. All right. So I do think that there is the possibility that we will tag that 48,000 mark, maybe on the day that the ETFs are announced as approved, if they are announced as approved. Either that, or we continue up slightly until we tag that, and then we find out, yeah, worst case scenario, the Bitcoin ETFs are not approved. And if that happens, my $31,600 support level will probably be tagged, to be honest with you, because there'll be a lot of disappointment if we have to postpone this excuse me, BTF approval once more. All right, now I'm going to pull up, let's jump to the dollar here. All right, this is the dollar daily chart, and I just wanted to pull this up just to show you what's currently taking place today. Look at this large green candle. So what happened here, guys? I just want to cover this. I drew this arrow many, many moons ago. The dollar has followed that trajectory exactly. Although I wasn't, to be honest, quite certain whether we would tag this support level at 100 or whether we'd come down here to this descending black trend line and tag that. And I think we still could, if I'm being honest with you, but I don't know for sure that's going to take place. Of course, nobody knows anything for sure. Anyways, the trajectory, the downward trajectory of the dollar has taken place as predicted, and currently we have this great big green candle. But Bitcoin has not. Typically, it will do the inverse, especially on a big move like this. Whatever the dollar does on the upside, Bitcoin may do to the downside, and vice versa. And that has not occurred. So what happened here is we tagged this support level at 100, and that was right in line with getting into oversold territory on the dollar down here on our RSI. All right, when we tagged 30, the level of 30, that's when the dollar bounced at precisely the same time as we tagged that $100 level support. All right, so now it could be that the dollar's downward trajectory is over for a bit and we continue back up. Maybe we come back up here and tag the underside of this 200-day moving average. You can see we're starting to get a bearish cross between this 50-day moving average and the 200-day. So that could spell more disaster for the dollar into the future or into this coming year of 2024. Okay, so now I want to cover CryptoCon's mid-tops theory. All right, so we have the MVRV-Z score here at the bottom. Anywhere in the green zone, if you can see that, is between 0.37 and 0.65. That's the buy zone. And the mid-cycle tops occur between 1.94 and 2.18. All right, so he noted that in 2012 we hit that mid-cycle top, and then we just kind of coasted for a while until we had our cycle top highs. We had two in those preceding or post-seeding years. And then in 2016, we hit that mid-cycle top again. It was about 6 months before we entered into, excuse me, the bull phase, and then hit our cycle top high in at the end of 2018. 2019, again, we hit the mid-cycle top, and then you know what happened after that. More recently in 2021, we hit our cycle top high, and again we've gone into this bear market, come down here into the green zone. Excuse me, guys. This cough is driving me crazy. Have come out of the green zone and are very near. Have not quite hit that yet, but the mid-cycle top. Does that mean, past history does not mean it will continue to occur again into the future, but it is a very possible, if not probable, that it will. And so we are nearing that mid-cycle top resistance area once again. Oh yeah, and before I leave this chart, note also here is the bull market to the bear market, and every time we hit that mid-cycle top, all right, see in that red zone there, we retraced on Fibonacci to 0.618 every single cycle in the bear market. We hit the mid-cycle top and then retraced to 0.618. All right. And again, over here, same thing. The pattern repeats. If you guys want to follow this further and study this, I am definitely never opposed to recommending other crypto channels for more information. In fact, that's why I have this up. There's no sense in reinventing the wheel when somebody else has already done the work. All right, so that's what I've done here, and I would encourage you to go study that chart and understand the point that he is trying to make with these cycle tops, highs and lows, and mid cycles, etc., etc. But of course, I did find the it looks like a good MVRV Z-score indicator on TradingView, which I've pulled onto this chart. I made the bottom green light, that's on the bottom here, the bottom green line, when we were hit that or were below that, that's a good buy area. I made that 0.5, and the red line at the top, which we're nearing right now, is approximately 2. All right, so you can see here back in 2012, we hit that mid-cycle top. Then it was a period of 6 months before we hit 2 new cycle highs. All right, then we entered the bear market, and we were down here, and this is a good buy zone. This is the longer term. This is what smart money tends to follow if they're trading in and out. There's a lot of hodlers, but even the hodlers will trade at certain points in time. And something like this, an indicator chart like this, is what they would utilize. All right, so then in May of 2016, we hit that mid-cycle top again. These I've denoted with the circles here on this chart. It was a period of, it was almost another year before we, am I reading? No, 6 months before we exited out of that, and then we peaked over here in December of 2017. Entering that bear market again, we went down, dipped, hit this mid-cycle top. Then it took a little bit longer. Notice each time, the time intervals between hitting these mid-cycle tops and the next new high or the next cycle top gets longer and longer. And in this case, we have entered the longest bear market ever. And I think hitting this mid-cycle top, if this theory proves to be correct, which I'm under the persuasion it very well could be, it could be another year before we break out and into new highs. I know that sounds contrary to what you've all been hearing. Moon boys are all out, and there's definitely millions and millions of dollars pouring into crypto. But I promise you, their intent is not to make everyone rich. Their intent is to make their own pocketbooks rich. All right, so it's not like they're just going to come pouring into the market without some kind of manipulation, possibly in coordination with each other, moving this market down, shaking you upside down in every last bag out of your grip. All right, and we have a lot of leverage now in the market because everybody is so sure that we're going to move up. So we've got a lot of leverage, and it's time to be cautious, in my opinion. Yes, all the indicators are still bullish. They're still flashing buy, buy, buy. My job, or what I try to do, is to get ahead of the most popular indicators with my own analysis. And this is where artisan charting really is to your benefit. If you know how to do this charting, you can stay ahead of what the average market does. So again, I am not saying any of this will come to fruition and that we are at a high for the year, but I would not be surprised at all if we just move sideways for another 4, 5, 6 months. Until we move into high territory again. That would not surprise me at all. All right, another indicator which I've always utilized and tends to help me in the longer term trajectory of things the longer term macro cycles, is the Meyer multiple. The Meyer multiple measures basically the amount of multiples that the price exceeds the 200-day moving average. All right, so generally, if you're below the 200-day moving average, that's time to start dollar cost averaging in. And we can go all the way down to half of what the 200-day moving average is. That's when everybody is in big fear mode. Bitcoin will never recover. The Uber bears, the perma bears come out. All sorts of FUD on the news, etc., etc. We're generally down there around half of what the 200-day moving average is. And when we get above the 200-day moving average, as time goes, you'll see, in fact, let me draw it out right now on the Meyer multiple chart. You'll see that the multiples go down less and less and less. All right. So look at that. That is intersecting our mid-cycle top right now, that descending trend line. That is very interesting. I did not notice that until I did this video, as often occurs. All right, but anyways, that's something that is super interesting and to keep an eye on. We have a big resistance point there. Not only do we have a Meyer multiple of 1.5, but it intersects with that descending trend line, which makes it a good area of confluence and could give further case to this idea that the ETF approval will be a sell the news event. I don't know. I'm just throwing it out there for you guys. All right, so once again, in recap, we have to watch this level here, 48,000, which is 0.618 Fibonacci retracement. And look at this, guys. We are under this resistance line, this ascending resistance line. So if we do go up and tag that 48,000 mark, I imagine it may just be a quick spike up. We touch it, tag it, and come back down, maybe even same day. It will be quick. Now, if we break above that $48,000 mark and confirm, we have to reset everything and do a whole new set of analysis here. But you can see my thesis here with, let me put it in auto here. You can see this big cup that I have drawn. It started at 48,000. We're ending at 48,000. And I have a proposed handle here. That handle, it would be perfect if we came down to these support areas. See these red channels here? And this would be a big area of confluence right in this area here at 39, 40,000 in that area. If we break below that, most assuredly, I would imagine we are going back down to tag 31,600. That was a level of support I talked about quite a while ago. That's still in the cards, guys. We could still touch 31,600. 31,600. That is not without the realm of possibility. But more likely, we come back down and hit this area here, forming a nice little cup. And that will take many, many moons to form. And some of you guys are going to grow impatient and get out of this trade or whatever if you're in the Bitcoin trade. But look at that cup and handle. That will definitely take us to a whole new level. Let me measure that out real quick. All right, so what I'm doing here is drawing a line from our neck, which is 48,000, to the bottom of that cup. And we take it to approximately where we would break out. I don't know when or where we break out, but that level of 48,000, you add on that additional extension, that takes us to 80,000, 80,000 basically. And that's a price level that I spoke about many years ago. I thought we would hit that. And, the pace of progress is a lot slower sometimes than you anticipate. Many of us traders, or those of us who invest in new technologies, we tend to be visionaries. We tend to look at these things and see the future, and we see the potential of blockchain and cryptocurrencies. And we we're understanding the impact and the effect that they can have on the future. And so we anticipate these price movements way in advance. But it takes the masses a long, long time to catch on to what's really going on. And that is the plight of humanity. We live in sometimes those of us who I don't want to make this sound egotistical, but some of us are visionaries. We're a little bit ahead of the average investor, of what they see, of what they understand from a particular technology, or maybe it's politics, or it could be any number of things, and you can see the future in advance. It takes the masses a good amount of time. I realized this a long, long time ago when I started studying politics and geopolitical events, and I knew what was taking place and how the powers that be were attempting to shape the future, be it good or bad. Doesn't matter. I just understood what was going to take place, and it is taking place. And, that was 20 years ago. I almost gave up at some time thinking that it was just all conspiracy. Turns out it's actually not. Conspiracy is actually the true reality of what's taking place, believe it or not. And the world's about to get even crazier. So just hold tight, guys, and stay vested. Keep the faith in your crypto, because it is definitely going to be the future of our global macro economy. Until the next video, peace, y'all.